A lot of confusions about this liquidity concept in the market, and this is the major reason why you don't get to know how this liquidity works in the market. But in today's video, I'll be simplifying this liquidity for you, and I'll be showing you two major types of liquidity and how to trade these major types of liquidity in the market so that you can get to make money off it, guys. So I'll be showing you how the structure works, and I'll also be showing you how it looks like on the rate chart, so that when you get to the rate chart also, you can get to trade this in the market. So let's get to the video. Let's not waste much of our time. I just want you to give me attention and give me your time, so that within these few minutes that we're going to spend together on this liquidity in the market, you can get to understand it and get to know how it works in the market also. But before we get into the video, if you're new to this channel, my name is Philip Joshua. I'm here to teach you everything that you need to know about Forex trading in the market, guys. So I just want you to press that subscribe button now. Tap on the subscribe button right now. Tap on the like button so that this video can push to more people. Then from there, we can move on with our own video now. So let's get straight to the chart. Let's not waste much time on the explanation again. But before we get to the chart, in case you don't know what's liquidity in the market, liquidity means money in the market. Liquidities are just areas whereby market get to rebalance and form new structures. Then from there, the market start going towards the direction that the market has chosen at that point. And we have these two major types of liquidity, which I would love to explain for you on the chart right now. So let's get to the chart. Let's talk about the two major types of liquidity in the market, guys. So let's go. So just like the way that I've said before, we have two major types of liquidity in the market, and we have the liquidity run and we have the liquidity sweep in the market. But I'd love to explain this liquidity run for you in such a way that you get to understand it and get to know how it works in the market also. So in this liquidity run, if you look very well, you can see that we have our change of character in this place. Let me use this arrow and explain it for you very well. We have our change of character in this place. We have our BOS in this place, which is breakout structure, and we have our liquidity run zone in this place, which is this area where we mark out, and we have our POI, which is our point of interest in the market, and we have the liquidity itself. I would love to explain this for you in such a way that you get to understand it based on the structure and based on how it looks like on the chart also, because sometimes you get to know how it looks like by structure and you don't get to understand how it works on the chart also. So looking at this place now, you can see that this is a market that is coming from a resistance point, and this market is about to turn to a buying market. The work of this liquidity run is to fill in areas whereby there are liquidities that are left in the market. Then from there, the market will start pushing towards the upside. That's the major work of this liquidity run in the market. So let me explain the structure for you now that you know the definition of this liquidity run in the market. Then from there, you can get to understand how it works. So I'll be using this arrow in this place, just like you have said before, to explain it for you. And this place we have our change of character. And before we got this change of character in this place, something happened in this market. If you look at this market very well, you can see that the market is coming from a resistance point, which is a selling point in the market. Then all of a sudden we had some kind of liquidity around this place. Then the market came and broke this place. This place over have a swing high, swing low, swing high again. Then the market broke this last structure in the resistance point. Then from there we got towards our new structure, which is the place where we expect the market to come and get a retest around. Then the market will start pushing towards the upside. But instead of that, the market came and broke this former structure, and we got our break of structure in the market, which is this BOS in this place. So when we got this BOS in this place, instead of the market to come back to this zone, which is our area whereby we expect the market to come to our point of interest, then from there the market will start pushing towards the upside. So instead of the market to get back to that place, the market started acting as if it was going to go towards the upside again. Then the market came to this place and formed another swing low in this place, form another swing high in this place, form another swing low again, form another swing high, behaving as if it's going to from there push to the upside. And this is where a lot of traders get liquidated in the market, because they think that from here the market has formed a good structure that can push the market towards the upside. And from here the market also dropped, because the market is expected to drop and get a retest around this place, which is our point of interest. That's the only place we are interested in buying this market, because normally if we have breakout structures in the market, no matter what, the market will just have to come and test the supply zone around that place. Then from there the market will start pushing towards the upside. So when we were expecting this, a lot of traders got liquidated around this place, because they don't understand how this liquidity run works in the market. So they will rush and enter the market around this place, thinking that this is a good retest. Then from there the market will start pushing towards the upside, and this is where they lose a lot of money. But we that understand the liquidity run structures in the market, we will always expect the market to come back to this our supply zone in the market, which is our point of interest in the market. Then from there the market will start pushing towards the upside, just like the way the market has behaved in this place. So that's one good thing about this liquidity run in the market. And I also love to show you a good example of this. Let me get to explain it for you in a deeper way, guys. So let's get to that point. Let me show you the example on the live chart also. So here's a perfect example of this liquidity run in the market, and I also love to explain it in such a way that you get to understand it faster and get to know what you should do whenever you find it in the market. And just like the way you can see that we have our rectangle in this place already. Let me just delete it and put it back again so I can know where you can get it from whenever you want to trade yours in the market also. So you see these three angle in this place, this angle, circle, and rectangle in this place. Once you tap on it, you see a lot of objects in this place. So you tap on this rectangle in this place, then you get your rectangular bars in the market. So this place now is our what? POI, the market, is our point of interest in the market, or we expect the market to get around. Then from there the market will start pushing toward the upside, because whenever we trade liquidity runs in the market, we expect the market to go toward the upside, which is the major work of the liquidity run in the market. So around this place you can see where we got our change of character around. Let me use this to explain. This stuff that looks like cross in the market, I'll be using it to explain it. So this side is our change of character in the market. This is the place where the market changes movement from a selling market to a buy market, and it didn't just happen by luck. Something happened in the market. So let's zoom out a little bit. You can see this place. This is a very strong support area in the market, and if we go deeper on this, we get to find the road on the higher time frames, which is the daily time frame, the H1 time frame, H4 time frame, and all those bigger time frames that we got the movement from before we got to this level on our 15 minutes time frame. But I just want to explain it on the 15 minutes time frame for you so you can get to understand it faster. So what happened here is that we got our change of character around this place. Then from there we add a formal structure around this place, which the market came and broke this structure around this place. Here we got our breakout structure around there in the market. Let me bring out my horizontal line and place it around that place so you can get to understand it faster. So around this place we got our breakout structure, because there was a structure around that place and the market has to come and break it. Then from there the market will now drop back to the downside. So look at what happened in the market right now, and this is where a lot of traders get liquidated the market also. So around this place whereby we got our breakout structure, sometimes traders do take their positions around that place, thinking that from there the market will start going toward the upside due to some kind of retest that they see in the market. But this is where the market makers get to liquidate traders, and once they are able to liquidate traders around this place, they will make a whole lot of money from the traders, because a lot of traders are going to place a lot of positions in this place, thinking that from this place the market will start pushing toward the upside. But the patient ones who understand this liquidity run strategy in the market, we get to wait for the market to get back to this our point of interest. Then once the market get to the point of interest, the move starts in the market. So you are someone who wants to trade this liquidity run in the market. Whenever you see places whereby the market breaks formal structures and the market doesn't get back to the main structure in the market, which is the main supply zone where you got the structure around, then just know that liquidity is about to occur in that place. So around this place, a lot of traders got their entries in the market, and this is the main place whereby the market makers get to liquidate them fast. They might be expecting that from there the market will start pushing towards the upside, and they will keep going towards the upside continuously. But this is where they got liquidated around this place whereby the market has started looking as if it's going to the upside. Then all of a sudden we got some kind of reversals around this place whereby the market came, broke this other structure also after the fake out in the market, because the market was expected to get back to this first structure, to this our point of interest in the market after the first break of structure, which is around this place. But the market had to kind of behave as if it got a retest around that place, confirming that that was a good area in the market whereby the market just got a retest. Then from there the market started going towards the upside, and around this place which you have another structure in the market had to come back and break the second structure. If at all the market after the second structure kept on going towards the upside, then we could have accepted that this is a continual move in the market. But look at what happened. Due to the fact that this is a very good area and is expected to be retested before any strong move happens in the market, after the market broke into the second area around this place, which is the second place where we have our second structure in the market started dropping from there. after this long week around this place. So people that got their entries around this place, expecting that the market will get back to this place, will make a lot of money from the market also. And people that are going to trade from this downside, which is our point of interest in the market, towards the upside, are still going to make a lot of money from the market. So the wise ones, which are the people that understood what's going to happen in the market, are those people that expected the market to get to this place. Then from there, the market start pushing towards the upside. So if I was to be in this market at that point, after we got this liquidity sign in this place, I will just wait for the market to drop to this side, because this side is showing that it's still valid in the market, and the market makers will always try to liquidate those that will rush and enter around this place. So if I was to be in this market, I will always wait for the market to get back to this my point of interest. Then from there, you can see what the market has done already. The market started pushing towards the upside, and the market kept on pushing for a very long time. So people that rush in getting their entries around this place will be the ones at loss, because once the market gets back and liquidate them, then the main move in the market will start, and a lot of them will be regretting, thinking that the market's against them, not knowing that they are the ones at fault. And from there, the market start pushing towards the upside after getting to a point of interest. So whenever you want to trade this now, the first thing you should look out for is the break of structure in the market. Then look out for that place whereby the market will just behave as if it's going to retest that break of structure, just like this place whereby we have a break of structure in this place. Then the market started behaving as if it's going to get a retest. So around this place is where we get the liquidities in the market, and once the market starts dropping towards the downside, which is our point of interest, that's where we expect the market to get to. Then around this place, you can see a lot of traders stacking a lot of positions, and those that are very, very consecutive with their entries will just get their few entries in the market and keep pushing with that till they get to their take profit area. So around this place is our entry in the market, which is our point of interest, and we can also use this place whereby we got the liquidity around. For people that they trade, that don't love staying in the market for a very long time, you can just use that place as your exit point in the market. Like this 2619.91, you can use that as your take profit in the market, and you still get to make money. That's for people that don't love staying long in the market. But for people that love staying long in the market, you can use places like this as your take profit area in the market, and you still expect the market to still come and break it, and from there the market will still get to break it, and you get to make money for yourself. So looking at what happened in the market, you can see that the market came around and also broke it before another retest to the downside, which kept the market pushing towards the upside again. And if you understand the structure of the market, you know that there are a lot of ups and downs in the market, and the ability to understand what is happening in the market is what makes you a trader and makes you a better trader. So that was it about this liquidity run in the market. Let's get to the liquidity sweep part. Let me get to explain that for you also. And also we have our liquidity sweep structure in the market, which I would also love to explain for you with this arrow in this place. So on this one, we expect the market to do what? To sell in the market. Unlike the liquidity run in the market, whereby we expect the market to buy, in this one we expect the market to sell. So look at what's going to happen in this place. Look at this place right now. We have a market that is coming from the resistance point, which is our selling point in the market. That's the area whereby we expect the market to get back to, and the market was kind of dropping towards the downside. We have this swing high again, and we have this swing low in the market. So on this one, instead of us to have two swing lows in the market, we have one swing low in the market, because this place is looking like a double top pattern in the market already, and we expect the market to break this former structure, which is the last resistance point in the market. Then from there, the market will just have to come and break this place whereby we have our swing high and swing low in this place. And after the market breaks there, the market will just come and get another retest around it. Sometimes we don't get retest around that place. We get the market move directly to our point of interest, and most times we do get retest around that place as a confirmation that this is not going to work. Like this area whereby we expect the market to move from to the downside, it's not going to work. Then after knowing that that place is not going to work, we have our break of structure around this place. So when we have our break of structure around this place, we expect a retest to the break of structure. Then the market will now behave as if it's getting a retest towards the upside. Then the market will still get back to our point of interest and get our purge in the market. Then from there, the market will start dropping towards the downside again. Because on this one, we are currently on a downtrend, and we expect the market to do what? Get a retest around this point of interest, form a purge around that place, then from there the market start going toward the downside again. So that's one thing about this liquidity sweep structure in the market. All you need is for the market to break the former structure, Then from there we get our breakout structure around the former structure. Then from there we get a retest, and from there we get our point in the market, and we get our liquidity sweep in the market. That's one thing about this one, and that's how it works in the market. Also, I would love to show you some live examples so you can get to know how this works perfectly in the market, so that just like the way I've known the structure already, when you spot it in the market, you know what to do and what to avoid in the market also. So that's one good thing about this one. Let's get to the chart. Let me get to show you also. So here is a perfect example of what I just taught you right now on this liquidity sweep in the market. If you look at this place now, you can see that we have our change of character around this place, and we had the market breaking this former structure in this place. Then from there we got the market forming a new structure around this place. Then the market came around this place and broke this structure in this place, which is the last structure where we have our change of character around. Then from there we got a retest to the breakout structure around this place. Let me use our horizontal line to mark that for you so you can get to understand it faster. So this place now, whereby we have our change of character around, this place becomes our breakout structure. Then from there we got this retest around our breakout structure, which is this 2648.66 in the market. Then from there we got our major push to the liquidity sweep zone in the market. Then from there the market started dropping towards the downside. So that's how this one works in the market. This area whereby I mark out with my rectangular line is the place whereby we expect the liquidity sweep around, and that is a zone in the market. And when we have zones in the market, we expect the market to do its things around that zone. So this place now is a very good zone in the market, and when the market came around that zone, the market wasn't able to break that zone. That was what made it a good liquidity sweep zone in the market, and from there the market started dropping towards the downside. And if you look very well, after we got our retest to this breakout structure area in this market, the market still came around and got a test around there. Sometimes it do happen based on the candle that was formed in the market, and sometimes we just get a sweet movement towards the downside, whereby the market doesn't have to come and retest anything in order for us to get any other confirmations. So this is very, very important, and it works most of the times in the market. If you look very well, we are trading good on it, and it's working for us on good also. So that's one good thing about this liquidity sweep in the market. Let's get back to the video and continue from where we stop. So at this point, I'm very, very sure that I have learned a lot of things about this liquidity sweep and liquidity run in the market, and you have also known the difference between these two things in the market. So all I just want you to do for me right now is make sure you watch this video over and over again, get to download it and keep it for yourself, because this is an educational content. This is not a comedy or any other thing that you get to watch once and from there you get to understand it faster. But if at all you didn't understand this video in the first place, get to download it, watch it over and over again. Then from there you can get to master these things and get to trade the right way. So that's all about today's video. And if you're new to this channel, don't forget to like the video, don't forget to hit the subscribe button, and don't forget to share the video with your trading friends so that from there they can get to watch it and get to know more things about the chart also, guys. So that's all for today's video. See you in the next one.